Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global market reporter at Nasdaq. Joining us for this segment, we have Bryan David, an associate with WestWater Research. The team has deep expertise in water rights, water transfers, economics, policy, finance, and water resource planning. Bryan joins me today to discuss the Nasdaq Veles California Water Index. Bryan, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me. Excited to be here.
You got it. And let's talk about that. The NQH20, what factors into the index price?
Yeah, so NQH20 is a weekly snapshot of the price of water throughout the state of California. So what people are paying on a real-time basis for water supplies for agricultural use, environmental uses, municipal services. So it's made up of prices throughout several different regions, most significantly the Central Valley, where most transfer and trading activity occurs, and then also in the Southern California region inside and around Los Angeles.
Bryan, what does the index tell us?
So the index tells us what people are paying for water due to big supply and demand factors. And so on the demand side, we see increasing demand for water for agricultural use as farmers switch to permanent crops, such as almonds or other nuts that need water on an annual basis. Those lands can't be fallowed or the trees will die. So that drives up demand. Also on the municipal side, with increasing urban growth, there's more water needed to supply homes. On the supply side, and we see in that graph, drought conditions and leading to overall scarcity of supply. Increasingly, we're in the third straight year of drought in California, and that has affected prices. The price has increased over 65% since January of this year alone.
And how is NQH20 different than other water indices?
So it's unique in that it is only showing the price of water as an input or a supply for those end uses like agriculture or municipal demand. Other indexes tell us the equity value of these companies that are water adjacent. So they make pipelines or fixtures or other technologies related to water, but the index is unique in that it is only for water. It is something that WestWater has developed through our proprietary research and analysis. It is unique to Western United States and is unique to the world in that it shows transparent price of water supplies.
What's a water futures contract?
Yeah, so water futures contracts are a new tool that WestWater Research developed in partnership with Nasdaq, and they're now listed on the Chicago Mercantile Exchange. And they are like many other commodities contracts in that they allow participants to purchase water, bet on what the price of water is going to be in the next few weeks or years, reducing their exposure to these changing prices that we see due to the hydrologic variability throughout the state. And so the contract is also unique in that it is financially settled only. So no physical water moves with the contract, but it provides revenue for a farmer or a water district to actually go out in the physical market and purchase that water. And so we've developed many different use cases and examples for participants to go out there. One commonly used one is for almond farmers in the San Joaquin Valley. Like I said, they need water on an annual basis, so their demand factor is high. Now they can go out and buy water at the beginning of the year, or purchase a contract, for $500 an acre foot at the beginning of the year. And then in June, the contract price that they will pay settles to the NQH20 index value at that time, which is $835 an acre foot last year. And then that difference of over $300 allows them to go out in the market, puts cash in their pocket to actually buy physical water to irrigate their crops.
And finally, Bryan, what can this tell us about conditions in California?
So it gives us insights in a couple key ways. Like I've mentioned, California has the highest hydrologic variability of any state, meaning it has big swings between wet and dry years. That leads it to being the biggest water market in the West. Over $1.1 billion is traded annually on the market. and farmers and producers need to better understand the price that they're paying for water, or how supply and demand conditions are going to affect that price at some point in the future. The futures contracts allow participants to better offset their revenue changes and potentially affect their bottom line because of those supply and demands and the scarcity of water that we're seeing as we go into likely a fourth straight year of drought into 2023.
All right, Bryan, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much.